Since our last stock market crash of March 2020, you could have doubled your money by investing in a simple S&P 500 index fund. Stocks like Tesla up over 10x since the crash, or assets like Ethereum up over 27x, offer the ability to greatly enrich yourself in a market crash. In today's video, I'm going to show you how these models show my plans for how I'll be investing when the next crash does arrive. Class is in session. Steve Antonioni here, back with another episode of Cash College. Sorry about that. Today might be a little bit fun, a little bit wacky. As you can see, I'm wearing my my flower kind of tropical shirt here because it's starting to get cold here in Toronto, and I'm trying to, bring some warmth back into life. And it's Friday, come on, let's have some fun. So in today's video, I'm talking about how I plan to make money the next time that the stock market crashes based off of these models that I'm going to be showing you in the video. But if we haven't had the opportunity to meet yet, first of all, I just want to say that was probably a weird first impression, and normally I don't actually dress like this, but welcome to the channel. So I'm a fire seeker on the journey to financial independence, and I'm documenting everything along the way. Last year, I used the power of personal finance to be able to quit my soul-sucking 9-to-5 job and now work for myself. I passionately believe that every person has the right to live a life of dignity and liberty in our society. And if that speaks to you, subscribe. I would love to have you here. I believe that financial education is something every person should have access to. And I've made it my mission on this channel to play whatever small role I can in raising awareness about this. And so in spirit with that, for the next week, I'll be running a Black Friday deal on my course. After the most recent reviews I've received on my course, the rating has increased from 4.7 stars to 4.94 stars. I was already really proud of the 4.7, but I mean, wow, it really warms my heart that you guys have found this to be this valuable. I love getting messages from you guys about how you're changing your life financially or otherwise. So if you do end up taking the course, please feel free to reach out to me with your own success stories. I love reading them. Check that out, linked down below. So earlier this week, I posted a video about what might cause the next stock market crash. I talked about this great concept from Warren Buffett, how interest rates can act like gravity upon stock prices. So I've been planning what I'm going to be doing if stock valuations come down. And to do that, I've created these models that I'm going to be walking you through shortly. By the way, if stock valuations come down, I think there's a very high probability that crypto will as well. So whether you're a stock investor or into crypto or both, like me, I think you'll find this video really interesting. Hopefully anyway. But before I show you the models, I just want to make something very clear. I am in no way hoping for a stock market crash. Generally speaking, a stock market crash happens because of economic devastation. I don't think any of us wish for that at all. But as investors, we also can't ignore the opportunity that market crashes do provide unbelievable opportunities to grow our wealth. If we can overcome one thing: fear.
Fear is the mind killer.
I really enjoyed Dune, partly because I'm definitely a big sucker for cinematography. Every frame in that movie was like a painting. But I'm also a huge sci-fi and fantasy fan. I just crushed the first 3 books of the Stormlight Archive this year, and all I have to say is, Bridge 4 for life. Anyway, fear really is the mind killer, especially when it comes to investing. So that's why I built these models. The idea behind these models is that when the market crashes, there's going to be widespread fear and panic. And I recognize that I myself may feel that same fear and panic, and this may prevent me from making logical decisions. So in the present day, when the market hasn't crashed and my mind is working logically, at least I hope it is, I've set rules for myself to follow once fear grips my mind. So, for example, looking at my rules for Tesla stock here, I have 6 columns. The leftmost column represents the price of Tesla stock. The next column represents how much the price goes down. The third column tells me how much I will be up or down on my investment. And the fourth column tells me what action I will take. And then the last 2 columns tell me how many shares I will have and what they will be worth. Now, you may have noticed that there's 2 columns here called if and then. So basically, this model tells me if this scenario happens, then I'm supposed to do this. And if you watch my last video, you'll remember that I talked about navigating stock market crashes or any market crashes using these if-then statements. So here, for example, if Tesla stock falls 30% from where it is today, then I will buy 5 shares. And you'll notice that as the price drops, I eventually increase the amount of shares that I will buy. And this is the exact opposite of what your mind usually tells you to do when an investment goes down, right? For example, today as I'm filming this, I've seen my Square stock fall by quite a bit, something like 20% over the last month or so. And so part of me is thinking, like stupid Square stock, you suck. I should sell you. But that's the wrong mindset. For companies I believe in, I should instead be viewing drops as a buying opportunity. Think of something that you buy often. For me, I love bubble tea, a nice lychee green tea with less ice, honey, and aloe vera. That's the good stuff. If it went on a 50% sale tomorrow, I wouldn't be like, bubble tea, why'd you go down in price? You suck. I'd be like, get me 2 of those, please. So these models will force me to keep my head on straight. And speaking of Tesla specifically, I actually did follow this model recently. Elon caused the stock to drop around $250 or so from its high last week. So I bought 1 share at $986, which was about 20% off its high of $1,229. And after just a few days, that share is up around 17-ish% already as of this recording, which is about $200 that I've gained so far. And for those of you who aren't aware, I did post this trade on Instagram the day that I bought it, and I will be continuing to track my trades on there, so make sure to follow me if you're not already. So that's just a small example of how this type of framework can help me profit off of opportunities caused by market crashes. But what about the other side of the coin? What about profiting off of the massive euphoria that comes from big market rallies to the upside? I'll show you how I plan to do that with my Ethereum model in just a moment. But first, let's talk about ETFs. In addition to individual stocks and crypto, I'm very much an ETF investor. So where's my ETF model? Well, I don't have one. And here's why. There is an excellent post in the Financial Independence subreddit about ETF investing by Jer Schneid. Jer Schneid? However you pronounce the username. And basically, it shows the story of 3 different ETF investors: Tiffany, Brittany, and Sarah. Tiffany invests her money at the worst possible times, buying the top of the market before every crash. Brittany invests her money at the best possible times, buying the bottom of every crash. And finally, Sarah just invests her money every month, no matter how high or low the market is. So who do you think ended up with the best investment? Well, it seems like Brittany probably did the best, right? If she had the best timing. But in reality, Sarah actually came out with the most money, simply by investing the same amount of money into ETFs every single month without worrying about whether the market was high or whether it was low. So that's generally how I approach ETF investing. Every week or so, when I have money to invest, I'll go and buy shares of the ETFs I want in my portfolio. In this particular portfolio, my RRSP, when I was building it, I had to buy 4 different ETFs when I wanted to invest. So I'd have to split my money across these 4 different things. For me, I use Wealthsimple Trade to build this particular portfolio, and so I basically had to go in, place my trades one by one, calculating how much money goes into each ETF. If you're in Canada, I'd highly recommend using this app because it's completely commission-free for Canadian listed ETFs. But if you happen to live in the United States, you can use an app called M1 Finance that lets you do all of this automatically. And right now they're running a year-end sign-up bonus where you can get up to $500 when you fund an account with $1,000 or more. I've linked both of these down below, so check them out, and I think you can be investing like Sarah in no time. Now, turning our attention to the final component of my portfolio: crypto. So while I certainly have plans described here for if crypto crashes, I also have plans for if crypto continues to rise in value. Because crypto is so volatile and bull markets are generally followed by nasty bear markets, I plan to sell portions of my crypto as the value increases. And you can see here with Ethereum, each time the value increases 25% past a 50% gain from where we are today, I'll be selling chunks along the way. But I won't be selling all my crypto, however. I plan to keep at least 10% of my initial investment in both Bitcoin and Ethereum, even if we go very, very high. And then after that, my intention will be to re-enter the crypto market once euphoria subsides and panic strikes again. Now, I want to be very clear of something here. These models are not predictions of anything. I do not predict the market. They're simply rules to follow based on what the market does. I mean, I think the Gom Jabbar scene from Dune perfectly describes a market crash scenario. We have Hollywood's current sweetheart, Timothée Chalamet, kneeling before an old woman performing a test on him. He's to put his hand in a box, which causes great physical pain, aka the market crashing and your portfolio going way down in value. And then held to his neck is a poison-tipped needle, aka the danger if you panic and sell. So the test is simple. If you can endure the panic of the market, you won't ultimately lose money selling investments when it's actually a buying opportunity. So folks, remember, fear really is the mind killer. Think about what you'll do next time the market crashes and fear grips your mind. And now, once again, for those of you who stuck around to the end of the video, here's a little Easter egg for you. This is the footage you normally do not get to see.